Hi everyone, in this video we're going to work through the workbook exercise AP 11B for chapter 5. And in this problem it's very similar to AP 10B. We have a spreadsheet here that we're going to complete with the adjustments and the adjusted trial balance, etc. And we are going to dive right in. So let's get started. Okay, our first transaction that we have for our adjusting entry is that we provided services worth $1,500 to a customer who had paid in advance. So if you remember, when a customer pays in advance, that's an increase to unearned revenue. So we should have an unearned revenue. Yep, here it is. So we have $1,600. And we've now earned $1,500, is what this tells us. So we originally had $3,600 as a credit balance. We're debiting that to reduce it. So our final balance here, oops, that should be a debit, or sorry, I mean a credit. Our credit minus a debit, so we have $2,100 left, and revenue will increase by $1,500 to reflect the fact that we have now earned that amount. Okay, let's say 1 month of insurance of $1,000 was used, so our prepaid insurance now is going to go down by $1,000. So debit, credit is going to reduce that, and we're going to get insurance expense for the other side of that entry. Depreciation for the month was $500. So we've got accumulated depreciation. Remember, that's a credit, contra asset. And then we're going to debit depreciation expense to record the expense part. Salaries accrued was $3,370. So the expense was $3,370 for salaries, and then the salaries payable is going to be our other account that we increase. If it's a payable, it's a liability, so a credit is an increase. Again, I'm going to copy these two cells because they have those formulas in them, and just paste these over so we can check and make sure all of our debits and credits balance. And we need to finish bringing all of our unadjusted balances over. Whoops. We have a debit. We reduced our prepaid insurance by $1,000. So credit plus, whoops, I had that on the debit side. So credit plus credit. Accounts payable had no adjustments. Salaries payable did have an adjustment, but he had a zero balance to start, so it's just that total. Oh, I did this while I was working through, so $2,100. Notes payable, $191,680. Capital just comes over. No adjustments. Revenue did increase by $1,500 with our adjustment, so now it's $79,500 from the unearned revenue adjustment. We have some extra depreciation expense, so that will add debit, and this is being debited, so it just adds on to the debit side. And same with the insurance and the salaries expenses. So we end up with $373,850 as a debit and a credit balance. So we're looking good. And now we're going to do the same thing like we did on AP 10B. We're going to go through and complete the journal entries for these same transactions. So the first one was that unearned revenue that we reduced. So let's look for unearned revenue. Oh, let's do our accounts first. So I'm just linking these from the other tab. Service revenue will be the credit, and it was $1,500. I'm going to come back and put the explanations in at the end, just because I'm kind of in the linking mode with my hand structure, how my hands are placed. So having the mouse and all that just makes it a little more efficient, I think, to do that all at once. Okay, 1 month of insurance was used, so insurance expense is going to be our debit. Our credit account will be the prepaid insurance. It's going to be $1,000 for both of those. Depreciation expense is going to be the debit, and then accumulated depreciation is the credit when we're talking about depreciation expense. Is $500. Okay, and finally we have salaries expense and salaries payable as our credit account. And I'm going to link those in. It was $3,370. Perfect. And like I said, now I'm going to go back. I'm just going to type in the explanations. Expense 1 month of insurance. So I'm just going through and putting some minor, just, some brief explanation. It's December, I believe. Yes. Oops, spelled that wrong. Do my little spell check. There we go. Okay, so now we've got all the journal entries in, and hopefully you're able to follow along with how I'm linking that information together. We're just, click into the tab, or click into the cell that you want to link, and you click on the other tab. Oh, sorry. First you have to put equals or plus sign, and then you click on the other tab. Click the cell you want to bring over, and you can just kind of link those. And it's not a necessity to do that for any, in the journal or anything like that, but I'm doing it this way, one, because it saves a little bit of time versus re-typing in unearned revenue and service revenue, etc. But also because I think it might help you better understand how the spreadsheet and the journal entries are connected, and they're basically the same thing. It's just a different way to look at it from this perspective of how it impacts the trial balance to this perspective where it's just the journal entries listed out in chronicle audit. Well, they're all on December 31st, but the journal entry is just listed one by one. Okay, so that brings us to the end of 11B. Like I said, very similar to 10B. Problem 12B is a bit more involved, and we're going to do some work in the general ledger with that. So I will see you in that video next. All right, thanks everybody.